All right, let's take a look at the S&P here because this is what we were looking at. Actually, as early as last week, you see that high at 1101.36 from the previous high, 1080.15, and it's got 1019.95 as the low. That blue line is the 50-day moving average. Now, let's just go up here and draw a line that shows what we're looking at here. This is what could potentially be major for the S&P. Notice that if it doesn't hold its 50-day here, there's a gap to fill all the way down at right around the 200-day moving average. Now that's a massive drop. The S&P is holding it right now, but the 50-day moving average is 10.50.51. It went as low as 10.50.31. So shorts on that attainment of the 50-day moving average may have covered, although we haven't seen much of a knee-jerk reversal yet. Now, what we want to look at here is the retracement off of the 1103 or the 1101.36 level, and if we look at that by just doing this here, if we take a look at that, pull this up here a little bit, you see the 869.32. Get this as close as we can. 1101.92, that's close enough for a range this big. Down to the 869, you'll notice something else here. Notice right again that a 61.8 or the first retracement is 1014.37. Notice that that is right underneath that, and we'll move this here, 1019.95 45-day low that the S&P attained before it went down and tested the 50-day before. So what we're looking at here is what's even more interesting about that is the fact that a retrace of the entire S&P range from 1576.09, not on this chart, all the way down to 666.79, the March 5 low, is actually 1014.40. So if the S&P does not hold its 50 here, it's without question going to go down and test that 1014.40 area, so we don't look for 1019 to hold. Now, it would have also lose a major uptrend, and again, there's a gap to fill down here. So we'll keep a watch on it. Right now, the S&P 1055.68 trying to make a bounce, even up another point from where it is on this chart. So we'll keep an eye on it. But the S&P has attained its 50-day. That's exactly what we thought it would do. More to come.